it comes to pioneer markets, the new frontiers, in many cases, we don't even have reliable indices because they're so fresh on board. But we are, in this context, talking about opportunities. And you know the story. You know, as costs go up in China, as wages go up, a lot of companies, you know, we talk to like the Li and Fengs of the world, and they talk about diversifying their manufacturing base and going to Indochina, Bangladesh. Myanmar has just broken out in the last 6 months as a democracy experiment. So when you take in the Indochina and French Indochina markets, what are the opportunities? Thomas Hugger is managing partner at Leopard Capital, and you know you find a lot of leopards in the Indochina markets. Thomas, welcome to the program. I noticed that Myanmar, former Burma, or some people, Hillary still calls it Burma, but is on this list as well. This is like a half-year-old story at this point about how they've engaged with the outside world and come out of their reclusive shell. I mean, what kind of opportunities are we talking about here? It sounds almost like more private equity than portfolio investment.
I mean, at the moment for investors, it's really still private equity investment because the country is just starting to open up. They're doing correctly all the things. We were also from our internal sources, our Myanmar expert, what he forecasted, they're doing the right things, and it looks to us that they're really serious this time to open up for the investments to the outside world. And I think already Mark Mobius said it previously here in this studio that first private equity investments will come in, and later on there will be financial markets will be developed. I mean, there's already a stock market, as you might have heard, in Myanmar. There are two stocks listed.
Two stocks listed,
okay. Yes.
But it's still a stock market?
It's a stock market, yes.
Thomas, let me ask you this. Bangladesh, Cambodia, Laos, I'm going to do this quickly. Mongolia, Myanmar, Pakistan, Sri Lanka, Vietnam, Nepal, Bhutan. A lot of these locations, one thinks of like adventure tourism more than investment. But, I mean, are we talking about systems in place? Are we talking about oversight in place? Are we talking about a regulatory framework and rule of law in all these domains? Is it a sort of a yes and no answer to this?
It's in general with Asian frontier markets, you cannot put all the Asian frontier countries in one shell. Every country is different, and that makes it so interesting to be a fund manager in Asian frontier markets. So, for example, in Bangladesh, you have even two rigid rules, especially for foreign investors. So there, in order to start trading, it's very difficult to find a custodian bank. They're very suspicious about foreign investments. There are tax on for investment gains and so on. And of course, in other countries, you have hardly any rules yet. Yes. So to answer your question, it's wild.
Right. Okay, Thomas, let me bring in my partners.
Hey there, good morning. Thanks for joining us. So let's get specific. Let's talk about Mongolia. We had Alisher Ali on the show yesterday saying that he's expecting 20% GDP growth for Mongolia this year. It's expected to be the fastest growing economy in the world. There are stocks. The capital markets are developing. The MSC has been sold off and it's quite low. What's your advice to investors? Should they be getting in and buying stocks like Mongolia Mining Corporation, for example, that's listed over there? And how much of a threat is inflation? Government spending is so high. How do you balance these things out?
Yes, you're right. There are about 330 stocks listed in the Mongolian Stock Exchange, and the daily turnover is something, on a good day, $200,000 US, and maybe 10 stocks are trading then. So some of them are really very interesting, but as you rightly pointed out, here in Hong Kong there are 2-3 companies listed which are quite attractive. One of them is Mongolian Mining or South Gobi Resources.
Yeah,
and to go back to your...
Yeah, go ahead, Thomas.
Yes, and to go back to your question regarding inflation, yes, certainly, I mean, if there's, it's certainly a concern. If there's so much of capital expenditure, yes, down the road there will be inflation.
So, Thomas, let's talk about access, and I don't mean liquidity here. We're talking about baby fledgling markets here. You can make probably a bigger argument, not so much for private equity, but just trying to go in there and get a proxy and maybe buy a property in one of these places and hope it doubles in a year or so. But I understand that you guys over at Leopard are starting a fund specifically to invest in these sort of frontier, out-of-the-way places that very few investors would would have the courage to tread into. Let me ask you, are you betting not so much on big private IPOs, because it's going to take a long while before it gets to that, but more on state privatizations to drive your fund?
In general, to be honest, we would prefer private IPOs of a privately run company than over state-run IPOs.
Thomas, great having you on the show, okay?
All right.
Fun. Sounds like quite an adventure there.